interest rates are pushing Canadian homeowners to the edge. With the cost of a mortgage on the rise, many people are increasingly concerned about protecting their biggest investment. Peter Sashecki from Everything Financial joins us now with more. Good morning, Peter. Good to see you.
Nice to see you. Good morning.
So you're telling me about something that a lot of people can't imagine happening, that the bank would renew your mortgage without your permission. This actually can happen.
Just happened the other day with a viewer where they notified the bank on what they wanted. They acted in plenty of time. Luckily, they had it all in writing. Showed up at the lawyer's office to sign the documents, and it was not what they had agreed to. And the bank said, we didn't get enough notice, and had them in a 10-year mortgage when they wanted a variable mortgage. They're going to be able to get it reversed, but at the lawyer's office, the lawyer just went, nothing I can do. You have to take it up with your bank. And then they were hit with a huge $3,400 fee, which now they're in the process of going after. But the key is they had everything in writing.
Interesting. So what would be the benefit of the bank going ahead and doing this and then locking in for that extended period of time?
Excuse me, yeah, longer term locking them in. They're there as a client now for the next 10 years. You have the bank handcuffs on you and you're not going anywhere. And this one is, let's be clear, rare. This one is really rare, but it can happen. So the key is take responsibility for your own finances and make sure you're getting your paperwork done and your renewals done well in advance. And the most important thing, email, document, keep a record of everything, because it's your money and you have to be responsible for it.
So would that be somewhere like in the fine print of a mortgage contract?
It's in the fine print of mortgage contracts. It's in the fine print of term deposit contracts. So going the other way, investing money, the same kind of thing can happen.
So how soon should you be getting in touch with your bank when it comes to your investments or your mortgage? I mean, when should we be getting on this?
Well, the bank says 60 days. We have clients get on it 90 to 120 days to get the ball rolling because things are busy, time flies. And right now, there is a backlog and the service is a bit slower than it's been before. There's less people on and so on. So getting started early is not a bad thing. But sometimes you'll ask the bank, 120 days out, and they'll say, call us when it's 60 days out. But you know what? If you're using an independent advisor, an independent mortgage broker, they can get started early and then have everything ready 3-4 weeks in advance of when that renewal's going to happen. You're already done, put to bed, and you're set and you can sleep at night.
When you do renew your mortgage, this is the time when you can evaluate and maybe you could switch financial institutions or mortgage providers. In the situation where you have this automatically renewed, is that an option for those people?
Not then, but if you get on it in advance, a mortgage shouldn't be just a product you buy. A mortgage should be part of your overall financial health check, your overall financial plan. It's not just one thing, it's one of many things for your future. And one type of mortgage, 5-year being the most common, does not fit all. I mean, still, even with rising interest rates, a variable mortgage, 3 or 4 more increases will still have you well below the current rates. So look at all the different choices out there and pick the one that fits your financial plan and your financial well-being.
We literally had 20 seconds, but I'm curious to know, with interest rates rising, I mean, is there a way that we know when that tipping point will happen that we should consider locking in? I know this is a big question. When do we lock in? This is the question
still well below. The fear factor makes people think we're well above the tipping point. A couple more mortgage rates and you say tipping point, a couple more increases, the tipping point ends up being recession if they raise them too fast.
Okay.
So you don't have to panic. Variable is still good.
Still good. Peter Sashecki, Everything Financial. Thanks so much, Peter.
Thanks, Gary.